which is, by the way, one of the reasons for cheap money. Bernanke wouldn't list this as in the top 3 or 4, is to prop up the real estate market. Because if you can keep mortgage money cheap, maybe you got a chance to get a bottom on the real estate market and start to get some base built if people can get access to 4 3/4 15-year mortgage money, or 4 1/2 15-year mortgage money. So that movement back up is really unfortunate. At some point, it'll start to hurt that market. The LIBOR rate, the London Interbank Borrowing Rate, which is usually quoted in 1, 2, and 3 month sort of rates, has eked its way up, but just ever so modestly. But my suspicion is that if the inflation gets caught on, you're going to see that LIBOR rate move higher. And the significance of that, as you know, is that a lot of other loans are pegged to the LIBOR rate. So if you get a loan that's at LIBOR plus 5%, or LIBOR plus, so if LIBOR is at 0.25%, 1/4%, and you get a loan at 5 over LIBOR, that means your loan is 5 1/4%. Okay, and that's a very common benchmark around the world, is the LIBOR rate. Yes.
Economically speaking, who would you like to vote for in 2012?
Who would I like to vote for?
Yes.
Well, I'd like the ticket to be Alexander Hamilton and Jefferson, in that order, President and Vice President.
Among the living.
I'm a real growth-oriented guy, and I'm really not. I don't really wear a big R or a big D on my chest. But of the candidates that are out there right now, and nobody that really appeals to me, the ones that are on the board.
What about Mick Daniels? What about Mick Daniels of Indiana?
Yeah, he's a possibility. I was going to say there's a lot about Romney that I have some appreciation for, and what he's accomplished and what he's done. But there's nobody really that clearly jumps out at me. I'd love to have somebody that was experienced and seasoned, because it's a very tough job to adapt to. To bring somebody new in, even if they've been a congressman for 2 terms, or they've been a senator for a half a term, it's just an enormous adjustment. I mean, Jimmy Carter was one of the smartest presidents we've ever had, and he just couldn't figure out how to handle Washington, how to get things done, and he got in a lot of trouble in a hurry. We've seen a lot of mistakes, legislative mistakes in this administration, I think, because of the immaturity that they had about how to handle the political process and what they thought their mandate meant versus what it really meant. So I don't really have a candidate that really jumps out at me. The process is all messed up. I mean, the money that's spent on these elections is ludicrous, absolutely ludicrous. And if you start trying to reform that, the media gets angry, because guess where the media gets a ton of its income? Advertising for the elections. So then you get this, it's real distorted, but I mean, I would love to see a cap at different levels, so much for a House race, so much for a Senate race. I mean, I'm sick of these candidates that have deep, deep pockets, and they spend you to death in getting elected, and they have no skill once they get in the job. I'd rather have a statesman than a politician. I'm sick of it. Sorry, I don't have an answer for your question. That's my view. A couple more hands went up. Yes, sorry.
Sandy, with us printing so much more money and weakening our dollar, aren't we kind of positioning the United States to eventually not be the largest cash reserve country in the world like we've enjoyed for the past 50-some-odd years?
Well, I think we're certainly planting some seeds for that. Here's the problem with the fact that, let's just use the seed analogy. So we planted some seeds that really do weaken the dollar, really do potentially threaten our strength around the globe as a currency. But if you look at your next door neighbor's farm, and he's planted yen, and you look at that farm next to him, and they plant seeded their crops with euros, and yours grow this high, and theirs grow this high, and the next crop grows this high. That's sort of the analogy. The U.S. right now is quite truthfully a beneficiary of 2 other regions or countries that are even weaker than we are in their currencies. For the most part, the yen is sort of an oxymoron in that. But I do think there are a couple of things that could happen prospectively that are really of interest in this. Somebody else asked me about this. One is that China may try and make their currency a true global currency. Right now, it's not truly a usable currency on world markets. So if they do that, they could be a serious player. The other is that the International Monetary Fund will bring together the major countries of the globe, get them to sit down and create a global currency. The prospects of that politically are beyond my imagination. But if things got severe enough for the United States, it's possible you could forge an alliance to do that. Right now, if you read China, they always do 5-year plans. You read their current 5-year plan, and boy, it is a textbook towards capitalism, a textbook towards gradual opening of the society. So, China's definitely got its aim. And at a growth rate of 10%, and ours at 3%, they're going to close the gap very darn quick. Yes?
One more question. With that same question in mind, doesn't it make the commodities a lot more attractive for us to be invested in, such as gold and silver, and because they're even projecting that gold is eventually, or some people are projecting, that gold is eventually going to reach $6,000 an ounce, and that silver will reach over $400 an ounce.
Well, yeah, I'm not sure exactly what lifetime that'll occur, but those kinds of projections I don't place. I'm not a gold bug. I do not advocate having a concentrated amount of gold in your portfolio. If you want to play gold, then do it through a mining stock where you get earnings and you get a dividend and you get something that you can watch with a balance sheet and an income statement, as opposed to something that's shiny in your vault. My dad probably loved gold. People forget gold was set $36 a troy ounce until Nixon unpegged it in the early 1970s. Literally, when he did that and made it a free market instrument, the gold markets actually shut down. They couldn't absorb what was going on in terms of price. Gold went from $36 an ounce to $1,000 an ounce by 1980. So the last 30 years, gold has managed to go from $1,000 to $1,300. I'm sorry, that's not a great investment. The real play in commodities is the developing world. At the bottom of the commodity should be a supply and demand relationship. The demand relationship is urbanization and metropolitanization and sub-metropolitan urbanization of countries that are developing countries. And that is a huge commodity demand source. And then the question is lining up, what's the supply? Is it in line? Is it not in line? How do I feel about that demand supply curve over a 5 or 10 year period, not over a 70 or 80 or 90 year time period? And I think that's pretty positive commodity. But you want a diversified index, something that has metals, grains, minerals, all of that stuff in it, natural gas, oil. A lot of commodity indexes are heavily weighted to gas and oil. 70-80% of their index may be in those, and that's just not enough diversification. And there's a lot of price volatility in commodities. So you need to be really careful that it's a long-term investment and not something that you're just trying to play for the current fad, because that's going to come and go over time. It's really a supply demand, but I do think it's an attractive part of the portfolio. Should it be 30% of your portfolio? Not to me. 5 to 7% of your portfolio? Maybe. But you start pushing 15, 20% commodities, I'm not sure. And I'm not sure why I want to do commodities. I can buy Archer Daniels. I can buy a public stock for every single one of those commodities. If I want to own oil and gas, I don't have to own the commodity index. I can own an energy company. I can own an oil company. I can own a natural gas company. If I want to participate in the crop boom, I can buy a fertilizer company. How would you like to have bought a little company called Potash 5 years ago? Okay. You'd have more than 10 times your money had you bought that, playing off of that theme of this urbanization of China. I'll give you one quick story on China. I'd love to read about China. I subscribe to all kinds of stuff about it as best I can. I wish I could travel there more often, but it's amazing. They are building 8 high-speed trains, 4 east to west across their country, 4 north to south. That's part of their infrastructure projects with stimulus money. They're all to be done by the year 2018. We wouldn't have permits by 2018. I'm not saying you want to necessarily trust them, and they might be running over fault lines. There could be a lot of other engineering things that may be going on. But when they pick up the phone and say, build a high-speed train, click, they weren't calling a congressman and saying, put this through Congress. This is an autocratic form of capitalism. When they get it right, and they got a lot right during the recession, they bought farmland, oil and gas rights, mineral rights around the world. They have exploited this rare earth phenomenon, minerals that are very rare that they've got in their country. So they've been, but when they get it wrong, like they did in the late 1990s, they can look very wrong, very fast. And they got a population that is ready to revolt. If you ever want to see, 300 or 400 million people